This is the Money Talks podcast. Subscribe now on iTunes. Listen to Michael Campbell and Money Talks live on Saturday mornings on CKNW Vancouver, 770 CHQR Calgary, 630 Ched in Edmonton, and live on the Radio Player app.
Putting your business in the street, talking loud.
Money Talks leads the way. Why? Because we feature great music like that. Silk Degrees, 42 years ago this week. That classic album by Boz Scaggs was released. That is Lowdown, won the 1977 R&B Record of the Year at the Grammys. The other reason, I've got great guests. I'm really looking forward to this. James Thorne, Caldwell Investments, is going to be with me in just a minute. But first, it's time for the quote of the week. There's been a huge uproar over Facebook and the use of data by a company named Cambridge Analytica during that presidential election 2016 on behalf of the Republican Party. The whistleblower, by the way, is a Canadian named Chris Wiley, who also had a $100,000 contract with our federal Liberal Party. But is anyone really surprised that individual privacy of 50 million Facebook users was breached? I mean, Facebook users have been trading their privacy for the ability to contact with friends, connect, with old acquaintances, people they haven't heard from in decades. No, they didn't want to use for political purposes, for sure, or psychological experiments, as Facebook admitted to doing in 2014. But as they say in the industry, they were willing to trade their privacy for product. Which brings me to the quote of the week in what's called Zuckerberg's Law, coined in 2008 by Mark Zuckerberg in a speech he gave. He says, each year, people would share twice as much information about themselves as they did the year before. As Zuckerberg observed, the concept of privacy is being eroded. It's a new social norm. The scandal with Cambridge Analytica is a predictable byproduct of our willingness to diminish our own standards of personal privacy, to trade that privacy, in the case of Facebook, for this opportunity to connect. So it's a bit much for people to act surprised about all this. I'm very pleased to welcome back to the show James Thorne. He's the Chief Capital Market Strategist, Senior Portfolio Manager of Caldwell Investment Management, manages their Pendragon Investment Fund. Great stuff. Caldwell U.S. Dividend Advantage Fund. Been in the business, well, I don't want to say for years, because I don't want to age James. He looks great, but managing billions of dollars. We're lucky to have him this week on the show. James, thanks for finding time for us.
Thanks for having us, Michael.
What a great fortuitous time after we watched the kind of market action we got on Thursday in the States, especially. Once it broke, man, did it ever go down. Then we get a little rally on 700 points Thursday, a little rally on Friday, then pow, down at the end of the day. When you look at that kind of stuff, do you first evaluate why you think it happens and whether it's significant enough to merit any action on your part?
What we do is we have a risk control model that we ask, should we be, simply put, in stocks or bonds? Should the offense be on the field or the defense be on the field? Mm. And right now, and the key, I'm going to simplify it, if the yield curve, which is the difference in price of interest rates, if the short-term interest rates are lower than long-term interest rates, credit is being created, global growth is going to keep on going. And as long as you have a steep yield curve, then it's stocks over bonds. If you invert the yield curve, when the Federal Reserve starts raising rates to have short-term rates higher than long-term rates, then you put the defense on the field. So firstly, we are very are constructive on global growth, and we are constructive on the stock market. I think one of the things and we were using these periods of dislocation or chaos, or however you want to say, as opportunities to buy companies that we really, really like, that are really well positioned for the themes that we think are going to last for the next 3 or 4 years. And so we look at these as big buying opportunities. There is a term called entropy, which is, when we get too much of a lack of order or predictability, it turns into chaos. And, Michael, I think over the last 2 weeks, we've had so much change thrown at us in the markets that we have entered into this period of entropy where people really don't know what to do. People pull back from the markets. The computers or the bots take over and start taking technical levels out. When they start taking technical levels out on the downside, when nothing's changed, this is your time to buy the high-quality companies that you've always wanted at bargain basement prices. So we look at this as an opportunity.
it's interesting, as you say, within that context, because the baby does get thrown out with the bathwater, because the overall market starts this sort of waterfall decline. I think that's not overused when you talk about a 700-plus point decline on Thursday, and that's what you're saying. Way too much stuff that doesn't have a problem, as you say. Nothing changed, and hence it creates that advantage. And I'm thinking with you, because you guys have done so well understanding blockchain and those sort of technological changes. Of course, Pendragon Fund is a global fund. You look everywhere for things, but I just was thinking of that, thinking, man, that would, if you're looking for an entry point on a couple of strong stocks, strong industries, that kind of a decline provides it, and you have to be prepared for some volatility along the way.
You do, and one of the themes that you've talked to your listeners about, which is very profound, is you've always been saying for a period of time is every company is now a technology company.
Yeah.
And that statement is profound, because where we are in the global economy, the way we talk about it is we're moving from the world of analog to digital. And we're in a period of time where artificial intelligence, Internet of Things, the blockchain, and big data are in a confluence where it will be the bubble and the economic growth period will be stronger than it is in the 1990s, when it was technology, which is our personal computers, telecom, which was the build-out of the Internet, and media. So the big theme in the 1990s was TMT. Last week, there was a company called Micron, and Micron is going to grow its earnings by over 100% next year. It is trading at 6 times. When the numbers came out, it went down 7%. Now, the earnings of the S&P 500, or the price-earnings ratio of the S&P 500 is around 16 to 17 times, and we could argue whether that's pricey or not over in a historical period. But when we have a technology company that's trading at 6 times, that's growing its earnings by 100 times, and it's down 7% after a wonderful quarter, you have to look at these periods of times as opportunities, and there's not going to be too many of them, so you need to take advantage of them after you've come through this period of time, or in your mind saying this is a period of time until the Federal Reserve raises interest rates so that the short-term rate's higher than the long-term rates. I'm going to use these periods of dislocations or periods of high levels of entropy to go in there and buy those stocks that I have on my shopping list that I've done my homework on. I'm going to take advantage of the emotion.
That's such a great example for me. And when you see me next, James, you can smack me in the head for this. But if we go back quite a few years, I wasn't comfortable with a lot of fund management. I'm going back quite a while. And as the market, it seemed to me, became even more sophisticated. And this is such a great example, what you do at Pendragon. I mean, first of all, I think I have sophistication, but I don't have time to look around the world. I don't have time to check out, as you've made recommendations in the past about certain opportunities in Europe. I don't have time, maybe I know the U.S. banking stocks, but, you made a very strong recommendation of those well over a year ago and, of course, did very well. But this is another example. I'm not familiar with the stock, but that's what a fund manager like you does, is that you have a team and you spend all your time looking for the very things according to your criteria. And to me, it's just a great argument why you let professionals manage your money. Well, professionals with a track record, all the things that you'd normally do. But this is a great example, is because I'm nodding my head as you say the baby's going to get thrown out of the bathwater. There's stocks that have really promising earnings scenarios, but they decline just because of the overall market. Hence, that's your opportunity. And I'm nodding my head, but a professional like yourself and your team are the ones who have discovered these. You have a list already. You already know what their performance is going to be, and hence so you're looking for entry opportunities. And I'm just saying this is exactly why people need professionals like yourself with their eye on the markets.
Well, you're right, and go back to the way you started out our conversation. The Facebook idea, the Facebook about having centralized data, what's going on there. That is also, we can take that to Google, right? And then when you look at Cambridge Analytica and you do some research on that company, and you recognize the fact that the parent company is very well connected with individuals that went to the school Eton in England, and you recognize the fact, and you start, and I'm going to put some conjecture out there, but you know what? Maybe there was a government that got involved in the American election, and maybe it wasn't Russia.
Mm-hmm.
Maybe it was an island. Maybe it was the United Kingdom.
Interesting.
Right?
Yeah.
Maybe, I'm not saying this in a bad way, and I don't have any data on it. But when you stand back and you look at it, and you start connecting the dots, there's just so much cross currents. Like, for example, with Trump and China. I mean, you have Greg Ip that just finally we had an adult in the room. Great piece in the Wall Street Journal this weekend by Greg Ip from Carleton University, got his first job with the Vancouver Sun, and he writes in the Wall Street Journal this weekend that, hey, it wasn't the United States or Trump that started this trade war. It was China. Like, finally we're getting some adults in the room. And, Michael, global GDP is $75 trillion. What China and the United States are talking about is $3 billion on China and $50 billion from the United States. That is a drop in the bucket. And yet we are freaking out about this. Come on, this is an environment where people have to understand that the president is going to do what he said he was going to do in the election. Now, you can agree with it or disagree with it, but he is going to put out his platform. I have comfort with that. That is transparency. Can someone please tell me what the economic policy of Ottawa is? Because I don't know. Right? So
I'm with you.
So with the Facebook situation, this speaks directly towards why blockchain is so profound, because blockchain is a database solution that cannot be hacked, and we control our data. And if somebody uses our data, we can track who uses it. That's why the blockchain is so profound, right? Everybody's freaking out about the Bitcoin, right, in these cryptocurrencies. Does anybody talk about the fact that the TMX and BMO just came out? It was reported yesterday that they're basically going to launch a cryptocurrency exchange where you're going to be able to purchase and buy Bitcoin and Ethereum. Does anybody talk about that? Right? I mean,
yeah, no, I'm with you. And Switzerland, I think, made an announcement this past week also. So, yeah.
Exactly. So all these things are coming. And for me, going back to your point, is it's difficult enough for me and our team at Caldwell to basically, this is all we do, to sift through the noise and the garbage that we hear out of the mainstream media. And so I think your listeners have to understand the fact that if there's one thing is every company is going to become a technology company. That is going to be the biggest theme of our lifetime. And to do that, we need to have secure databases that are decentralized. That's the blockchain. And any company that exists that is making money by centralizing and taking your data and selling it to people unbeknownst to you and having that used unbeknownst to you, that business model will come under attack. And so if you understand that, and you also understand the fact that Donald Trump is not going to put the global economy into a recession, and we know that all we have to do is sit there and buy the dips as long as the yield curve is steep, then we look at these these situations over the past 10 days as wonderful, wonderful opportunities. And if your clients or if your listeners want to be traders, then after in 8 or 9 weeks when everybody thinks everything is wonderful and the stock market has had a 12-week run and it's really, really strong, maybe you should take some money off the table, because there will be another period of time where there will be a high degree of uncertainty and cross currents where stocks will come down, not for any fundamental reason, just because, of emotion, because of policies that were talked about, and then the computers take it over and they take them down to technical levels.
I'm talking with James Thorne. He's the Chief Capital Market Strategist. I think you can hear why I'm always love having James on with us. He's Senior Portfolio Manager, by the way, for Caldwell Investment Management. I'll take a break. I'm going to come back just to ask James about, I want to do the lightning round with him, of course, but first question will be, how do we invest in blockchain? Are we looking for the companies that already adopting it, or the companies that are originating it, the providers? We'll check with him when we come back right here on the Money Talks Network. Dr. James Thorne is my guest, CaldwellInvestmentManagement.com. James, just before the break, we were talking about blockchain. I know you guys have been on top of that for years, but just give us a quickie on how are you investing in blockchain? Is it the company that's doing the blockchain, or is it the companies that have adopted it?
Okay, Michael, there's three buckets we look at. One is it's called the permission blockchain. Those are the companies that are using the blockchain to increase margins or cut costs. We'll put Walmart in that bucket. So there's companies like Walmart, Coca-Cola, in those buckets, in that bucket. Then there is what we call the disruptors or the permissionless blockchains, and we would put a company like an Overstock.com in that. We would put a couple of Vancouver names. Hut 8 would be in there. Hive would be in there. And what those companies are doing is they are disintermediating existing industries. Okay? And then we have another one which we would call the enablers. And the enablers are what we call the arms merchants, or let's call about the general stores that are selling the picks and shovels to all the gold miners, right? And those would be like the chip companies, the software companies, and the semi-cap equipment companies. So you can do three buckets, and you can get really conservative companies like a Walmart. You can get companies that are very focused on basically disintermediating industries like an Overstock. And then you can get a chip company like NVIDIA that are making all the chips that are being used to disintermediate industries and help companies become more efficient. So it's a three-bucket approach.
And it's fascinating stuff. And as you know, on this show, I've been talking about how key it is to get on board the Blockchain Express. So great stuff. For more, go to CaldwellInvestments.com. Time now for the lightning round. 10 questions with James Thorne. Are you all set?
Got it.
First job.
Pumping gas.
Favorite movie?
Casablanca.
Favorite historical leader?
Churchill.
Best concert or live performance you've ever seen?
Van Morrison in Harlem.
Oh, I just talked about Van last week. Best piece of financial advice you ever got or gave?
Quell your emotions.
What's your favorite way to pass time, like a hobby or a sport?
I love reading history.
Favorite city to visit?
Paris.
Best subject in high school?
Math.
Biggest financial mistake that people make, do you think?
Quelling emotions.
And favorite financial show on radio, you have to have a specific answer.
Money Talks with Michael.
There you go. James, seriously, what a pleasure it is to have you with us, and I want you to know how sincerely grateful I am that you find time for our audience, a huge audience, and they really appreciate, I'm sure, the insights as I have with James Thorne. Thank you.
Thanks so much, and I hope they appreciate the work that you're doing for them. Take care.
Well, that's great. CaldwellInvestments.com. As I say, Pendragon Fund. Also, of course, he does a Caldwell U.S. Dividend Advantage Fund, so check them out. I'll take a break. I'll come back. I've got a couple of shocking stats for you. Victor Adair and Ozzie Jurek.
But that was all he missed, and he ain't coming back.
We've been featuring the music of Silk Degrees, Boz Scaggs. Incredible album. Loved it when it kind of came back to me when we were going to feature it this week. That's the Lido Shuffle, though. Here's an interesting thing. The accompanying musicians on that track are David Paish, Jeff Porcaro, David Hungate. They were veterans of Steely Dan's recording, but they were just about to form another band called Toto, who went on, of course, to great success. Boz Scaggs, 42 years after Silk Degrees was released. Time now for this week's shocking stat or stats, because we have two from different corners of the political BS world. First up, the U.S., where the U.S. Congress has just passed its budget bill. Here's the shock. The bill is 2,232 pages long. Here's the tragedy. The bill passed without a single member of Congress, having read it. The most important financial document in the country, and they don't read it. How can you not hold them in contempt? The second part, though, from the world of political BS, comes from Canada. Since Prime Minister Trudeau declared at the outset of his mandate that Canada wouldn't be involved directly in the military mission against ISIS and in Syria, not involved in combat, we've heard that sort of familiar, morally self-serving conceit that Canada is a nation of peacekeepers, or some a variation like that, like we make peace, not war. And the only trouble is, it's utter BS. We nowhere near pull our weight when it comes to UN peacekeeping, and it's been that way for years. And that brings me to this week's shocking stat. I know all along that all the chest thumping that Canada's back was virtue signaling BS. That obviously some people in search of bolstering their lagging feelings of moral superiority and smugness needed to have another pat in the back. But I still had no idea how big a load of BS that was. Question for you. How many soldiers do you think are involved in peacekeeping missions from Canada right now around the world? 5,000? 1,500? Maybe 500? No. As Global's Auto Bureau Chief David Aikens reports, as of the end of February, the number was 12. You heard that right. 12. 12 members of the armed forces from Canada. Now there's 19 police officers and 10 field experts. The total is 41. Where does Canada rank, though, when it comes to UN peacekeeping? We rank 78th out of 87 contributing nations. 78th out of 87. Canada is the very definition of all talk, no action. This is what comes from that virtue signaling leadership that is so popular among the progressive left. But a dozen members of the armed forces. My goodness gracious. As I say, I was shocked by that. I know we like just the talk and no action, but that's ridiculous. I'll take a break. Aussie Jerk with me. Stay with us.
Take to the wind, and as she breaks down within.
Great to have Aussie Jurek back with us here. Just listening to Boz Scaggs, twiddling my thumbs there. Love that album, Silk Degrees. But Aussie's back. Love that he is back. You know, Aussie, I was just thinking, you've been going, you go away for a few months, explore the world, got lots of reports for us, and I'll get to that in a second. But I was just thinking, 2 weeks from today, you're back at the Land Rush Conference. I mean, you don't take a break, do you? Both feet.
Yeah,
you're there with both feet, 2 weeks Saturday.
Well, people say after 3 months you ought to do some work. Anyways, we have our 26th annual forecasting seminar. It's really amazing. 12 speakers, 500 attendees. We'll be at the Pinnacle Harbourfront Hotel. You can look us up at landrushcanada.com for tickets. But Mike, we've had an amazing track record. If you've done nothing else but just attend for 25 years and listen to some of the recommendations and acted on them, you would have done extremely well.
But I'm looking at last year. Sorry to interrupt you, but last year I made notes. I made notes every year, by the way, Aussie. But, I mean, think of how much you've moved. I mean, you can go out into the Vancouver area in the Surrey condos, up, 60%. But you also talked about Seattle, which is, you've done that, I know, for a couple of years, but that's been a huge hit. Phoenix, you told us about in 2011, right? Sort of as the subprime mortgage crisis was taking a beating there. You got into Phoenix, but last year I looked at Coquitlam, Surrey, some of the Burnaby stuff you said. Yeah, it's really had a great track record. I mean, you've got, I know, a lot of speakers, tons of people attend, but I want to pat you on the back for that, because in this business, that's the name of the game.
Yeah, and it's a confusing world. We've had huge inflation. What's going to happen? What's QE? What's QT? All of those kind of stuff to make us make intelligent decisions. And the same speaker in 2016 that told us to go into Surrey, and the building that he recommended us is the builder Sharan City. That building is up 50%, and he's going to be speaking again. So it's going to be exciting. Can't miss it if you're interested in real estate.
Yeah, great stuff. That's April 7th, so you're talking a couple of weeks still, but just go to landrushcanada.com, landrushcanada.com. I said, Aussie, a moment ago, and I don't want to take too long, but I said a moment ago that you've been traveling around, but I remember you telling me a story going back a bit where when you did that when you were younger too, and that you lived in Sydney, I think it was, and I've been, Sydney about 2 years ago, and I was watching their kind of real estate market look very much like Vancouver, at least Toronto did for a year or two until Kathleen Wynne decided to crush the industry. But you lived in Sydney a while ago, and I was going to ask you about that because you had to live somewhere when you were there.
Yeah, we lived in which was actually a fairly old house in a place called King's Cross, and that was on at a astounding £19,000. Actually, that actually got me thinking about real estate when I was very, very young. Well, that same street, that same property, or right next door to it, because it's gone, and it's now a sort of what I would call a very small 1,100 square foot townhouse, is now just under $2 million. And that's the thing on travel. You know, when you and I talked in 2014 about London, when we were there, and we were the negative news about London, and yet London was soaring, and Ireland was soaring, and last year we were in Russia, and in Russia the prices are going up in Finland. And hey, in Sydney, in East Melbourne, since the last 10 years, it went from 1.6 million to 4.1 million. In Turok, from 2.1 to 4.8. I mean, it isn't just Vancouver. The world in its major cities is aflame from Hobart, Tasmania to all throughout New Zealand. And that's what I got to understand. We have a crazy world out there, not limited just to Vancouver.
And again, is everyone talk the same way they do in Canada, especially out in the West Coast, about foreign buyers?
No question about it. In fact, the debate on what kind of taxation should in, like Hong Kong had for years, a taxation that if you bought a property as an expat, like a foreigner, you would have a tax. If you sold the next year, you had a 50% tax. The year after that, 40%, and so on. And it's only after you kept it for 6 years, then you weren't having any tax. That would be, by the way, a true speculation tax, because after 6 years, the idea is you're no longer speculating. But rather than what we have now in BC, which is a wealth tax, it's just simply a grab, and they're trying to shift money from one person to another. But the interesting thing is that throughout Australia, the chief economist said that in our biggest capital city, the very high prices are now being achieved quite far from the center. In Melbourne and Sydney, $1 million suburbs are now some distance out, and it's continuing. And so when we look at Surrey exploding literally, I mean, condo prices on balance up 40%, and in central Surrey 60% in a year. That's what's happening here too. We are becoming so expensive in town. We're now heading into the Fraser Valley.
You know, it's one of the simplest things, I think, in real estate, or straightforward concepts, is that I always thought if you drop a stone and you watch the ripples, that's kind of like what it is. So you drop the stone in downtown Vancouver or Vancouver proper, it was bound to then spread out to the suburbs. And then the really fun part is how far do it go? Because it's certainly, I think, a lot of this is why I think, again, that speculation tax misses the point in some ways, a lot of ways, actually, the one they've applied here in British Columbia. But you know, there's a ton of people in Vancouver. We're always going to go to Victoria, Nanaimo, Kelowna, Penticton. It was going to spread out, as you've just described, happen again when you look at Melbourne, you look at Sydney, you look at the suburbs and how far that spreads out. You've seen it in the States with Seattle, how far those spread out. You know, so it's a phenomena that it's very interesting for investors to appreciate, because it's pretty easy to think, okay, this is where the action is. It's going to keep spreading out for affordability reasons. But it's interesting to hear from you that this is the kind of thing you're seeing throughout the world.
Well, that's the key, Mike. I mean, you go to a place like Hobart, Tasmania, you think in your mind small island somewhere. Well, the median home price now is $825,000. A medium condo is $536,000. The average price is much higher than that. New Zealand is up between 7 and 18%. And so you look at some of these and you say, my goodness, what's happening? And that brings it back to what I always maintain, is that we live in the world's most unreported inflation of all time. That is inflation in hard assets, which you've been arguing for the last 10 or 15 years. Is that, you know, you've got to save yourself. You have to be in hard assets. And we just maintain that inflation is all the same. And we have headline and core and all this nonsense. Any housewife knows that nothing is going up at the rate of only 2% on anything that she buys, or any payment that we make, or whether it's buying a passport or paying for parking. It's not up only 2%. We have a cost price inflation of some magnitude. And it's funny, you quoted Mr. Friedman, of course, Milton Friedman, who I've been quoting for 15 years, that inflation is primarily a monetary phenomenon. And we have the mother of all monetary phenomena for the last 10 years, and guess what? It settles down in hard assets.
We've only got about 10 seconds left. You got a quick hot property for me?
We got one in Maui, lowest priced, 1 bedroom, 1 bathroom unit. I know we never recommend Hawaii, but this is really cheap, $405,000, right on the beach in Kahana.
Just go to Jurek.com, click on the hot property button, and also go to LandrushCanada.com for tickets. April 7th, 12 speakers. There'll be hundreds of people there, but you can build on what they've been doing the last several years. Ozzie, nice to chat with you. Chat with you next week.
I've been feeling down some too. After all this time now, ain't it clear? I've been waiting just...
We've been featuring the music of Boz Scaggs from his album Silk Degrees. Here's an interesting thing. When he was a kid growing up in Texas, He used to play guitar with a guy named Steve Miller, the Steve Miller Band. Great album. Check it out again. Wonderful memories. And go to polarfutures.com, by the way, polarfutures.com to see the full, comment there, polarfutures.com. Time now for this week's Goofy Award. And it's about time we revisited Kinder Morgan pipeline expansion. With reason. Where reason, I should say, where reason, intellectual consistency, respectful dialogue, ignorance, ideology, politics all come together. And speaking of intellectual consistency, maybe better called hypocrisy, let's get to the goofy, which goes to Washington State Governor Jay Inslee, who came out this week supporting the BC Green NDP opposition to the pipeline expansion. And nice to see protesters kayaking in Seattle's port in opposition too. Which I hope reminds people how bizarre at best and sinister at worst it is to see Americans so concerned about Canadian oil in the same week that the U.S. once again broke their records for oil production, which in the 10 years since San Francisco's based corporate ethics first targeted and helped finance U.S. opposition to Alberta oil, U.S. production's grown 250%. You got to ask, why haven't they focused on their own country? But another day. But back to Governor of Washington, who doesn't mention that his state relies on the existing Trans Mountain pipeline and oil transported by rail and tankers to supply its refineries. Last year, 46% of Washington State's crude oil imports were transported by tanker. The Trans Mountain pipeline supplied over 28% of Washington's petroleum needs last year. In fact, the majority of the product now moved through Trans Mountain pipeline ends up in Washington, along with over 4 million barrels shipped to Washington by train from Alberta. Washington State would be one of the biggest users of petroleum transported by an expanded Trans Mountain pipeline. And if happy to have thousands of oil transported right down the BC coast already from Alberta. No complaint about that. From Alaska, from Alaska. Alaska down into Washington State by tanker. Funny how the Washington State government doesn't oppose that, though. It's only Canadian oil that they have a problem with. That's all the time I have. Go out and enjoy the weekend.